All right, welcome to TheoTrade and the Theo Video Report. This is Don Kaufman. Here we are on December 17th, 2015. We have just minutes to go to the close, and the S&Ps are getting hit just in the amount that they rallied yesterday. They're getting knocked back today quite a bit, but there's unusual stuff going on, and that's why I wanted to record this pretty much right into the close over here, because, you know, when was the last time you saw the S&Ps getting hit? And they are getting hit right now. You know, listen, 25 points, the volume's elevated, 1.8 million contracts, not too extreme. But when was the last time that you saw as a trader the S&P's down 26 and the volatility futures are only up 27 cents? I mean, this is like the sky is falling and nobody seems to care. I mean, that's really what it kind of comes down to over here. And I think a lot of people are probably not seeing what I'm seeing on the screen, but order flow is screaming right now. We're going to crush them, okay? And the volatility futures, nothing. But we are getting movement from the bonds, okay? We are getting, gold getting crushed back. We've actually got the dollar exploding. I mean, listen, the dollar futures, 100 is in sight. All right. Everybody's been talking about eventually the euro US dollar goes to par at $1. Well, it's making a hell of a shot at it today. So all over the screen, it's red. It's ugly. But let's start to look into kind of individual sectors and so forth. And we'll zoom in over here. This is the S&P 100. Doesn't get too much worse than that. It's kind of what I call that quintessential all-down day. Can you hear the excitement in my voice? Yesterday's FOMC rally, it was just disheartening. All right, Janet Yellen comes out. She did it. What did she do? Not much. All right, they raised, kind of. And right now, again, order flow is just screaming that markets are getting tagged and tagged hard. Yesterday, I also talked about in the SPX, specifically how overextended the SPX happened to be. And yesterday I was talking about, well, the SPX was overextended, and now we're actually going to go into a chart. Imagine that. Don Kaufman looking at a chart. Stranger things have happened. Obviously, you can see I'm working several different orders over here in the SPX. Nevertheless, you can see where I was talking about yesterday. This is Monday, Tuesday, Wednesday of this week. And the SPX was exhibiting, all right, this expected move of about $80, and we got the $80 move, and I said pretty good chance we're going to come right back to the neighborhood of about 2050. Well, we're there. Okay, we're there. Yet we still have, okay, time left in the week over here. When I say time left in the week, you got to go over to the trade tab and recognize, number one, I mean, this is kind of crazy over here. The DECE options, which relatively speaking, they say they have 1 day left, but for the most part, these things are toast, right? Why are they toast? Because the SPX options, the last day you can trade them is, well, today, right now. You've got 1 minute and 55 seconds, 54, 53 left to trade these things, and yet they're still showing an expected move of $15. Why? Because that could be the gap differential between the close today and the open tomorrow. See, these SPX options, okay, when do they actually expire? They expire tomorrow's opening settlement. Not an opening print, okay, not the opening price, but an opening settlement. And they're actually pricing in. They could be as much as a $15 swing in there. Next, I got to go over to none other than the spiders. Okay, and you think again like, this expected move stuff, and you got to get into this. The expected move is still showing through Friday over here, what? Plus or minus $2.25. Okay, so volatility, it's not extreme though. It's like a 16 vol, but still we're looking at like a 20 some odd point move between now and kind of Friday at the close over here. Again, you're thinking, maybe I should have expected something a little bit more extreme. With 1 day left, 22 point expected move. I don't know. I think it's still kind of a lot. All right. I mean, again, that's what it comes down to. I actually think that expected move ain't half bad. You know, a $2 move or a 22 point move in the SPX, not half bad, given the fact that we already saw what we thought was going to be the heavy amount of volatility. But again, as I come into the close over here, the order flow is ugly. I mean, it doesn't get much more ugly than this. And now you're even seeing like the volatility futures, they're up 50 cents, but it's still nothing. compared to what you think it would be. So I go out to the next expiration. And if you're thinking at this point, you're listening to this, you're like, Don hasn't even talked about individual stocks. How come he's not talking about Apple getting crushed? He's not talking about my Google? Why not my Google? Okay, there's the bell. Bell couldn't have gone off fast enough because that was just hideously ugly. All right. In fact, just to point this out in the last few minutes, and I'll come back around to that thought over there because, hey, the market's happening. The market needs our attention right here, right now. That bell couldn't have gone off fast enough. You just saw a trade, and I've got multiple screens up, and I saw this come out on my screen, but you just saw a trade of over, 50,000 contracts trade in the last minute of the day. You can't close a market down fast enough when you're getting that kind of action. The S&Ps, when we started this, were down about 24, 25. In that last 5 minutes of the day, they dropped like a rock. All right. Ugly, ugly move into the close over here in the volatility futures. All right. Did kind of move up. I think they moved. Nevertheless, why am I not talking about individual stocks? Okay. The time out for a second. You throw whatever you think about individual stocks, you throw it out the window right now. Nobody cares. Okay. That's the bottom line. Like, people don't get. It's a marketplace, right? And the marketplace is going to move individual stocks, plain and simple. All right. It's, you're like, well, Netflix held up very well today. There's always going to be kind of the odd man out. But when you look at the NASDAQ and you realize the NASDAQ's down about 1.6%, you start to look at some of the game players in here, and they're going to follow suit with what the NASDAQ or the S&Ps are going to do. Moreover, okay, what's important right now is not individual stocks. This is more about sectors. So now we're going to go look at the S&P 500 sectors. Okay, if you've never looked at this before, energy, crushed. Okay, one of the larger sectors over there. But then you look at the financials, okay, and IT, and they're down pretty much in cahoots with one another. So this entire, marketplace gets hit today. Yes, what's this? Utilities. Yay, utilities. You guys did it. By the way, utilities, I'm kind of poking some fun at it because their entire market cap over there doesn't amount to like Google. Legitimately, if you look at like a heat map, we'll go over to a heat map and we'll pull up just the S&P 500. Okay, where's utilities? Where is utilities? Oh, there's Google. And here's utilities. So, yay, utilities, you did it. You actually were green on the day. Nobody cares. All right. This entire market right now, it's about the S&Ps. Okay. It's about what's going on in the broader marketplace. It's about volatility. It's about expected move. Individual stocks, they don't matter in moves like this. Okay. Yes, some of the big tech giants here. Okay, and the ones that I specifically look at, Facebook, Netflix, Google, Amazon, they actually did hold up quite well today. Had those stocks also fallen hard, this would have been a much more severe day. But we had the S&Ps, again, they're still dropping here in the after hours. They're now down 36 points. Okay, you got to, at that point, you got to turn around. You got to look at like, what's volatility saying? Remember, the index options still trade after the close. You realize that next week we're already looking at like a $42 move. But based on the movement that we've seen, okay, this is a $42 move for all of next week. $42 move. We moved almost $40, okay, in the S&Ps today. What gives over here? We're actually exhibiting kind of wild volatility right now, and it feels like the S&Ps in the marketplace, the volatility is not displaying it. Keep this in mind if you're going to be an option premium seller right now. Okay, things are moving at a rather extreme, and yet it doesn't feel like volatility is priced in. For that, we go to option statistics. Okay, one of the tools in Thinkorswim, it's the unsung hero. You realize the IV percentile is only in the 23rd percentile. That means we're at the low end of the spectrum of volatility. Okay, and the HV percentile, okay, which is actual movement, is a 33rd. All right, what that basically means, it says right now we're not moving in an extreme fashion, and it's kind of pricing in, like volatility's pricing in. Nothing. Nothing. What are you talking about? You take a look at this marketplace. All right, over the last just few days, Okay? Nothing. We've seen a move in just the last few days from what, 211 in the spiders. In fact, we'll go to the SPX for this. Let's go to the big boy. Okay? We'll go to the SPX just to enunciate a little bit more. And you look at the S&Ps and you tell me that this is not starting to get crazy here, where we just had a move. Again, let's just look at the last 2 to 3 trading weeks from 2100, okay, to 2000, back up, threatening the 2080 level, back now down to 2040. If you just want to look at the last 2 weeks of trade, your 2100, okay, that's a 100-point S&P move followed by an 80-point S&P move followed by today's almost 35-point S&P move. These are extreme moves. The irony is, in the shortest duration, it would have actually paid off to be long options, not short options. What I am screaming at you right now, don't sell option premium in the shortest duration. I don't like it. I don't have to like it. Okay, volatility seems very, very low for the kind of action and the price action that we're getting over here. Hence, I'll actually consider buy-side strategies right now. Can't imagine that. Don Kaufman saying he's going to buy options. I want to thank everybody for joining us here at TheoTrade and the Theo video report for, again, December 17th, 2015. Be back tomorrow. Bye-bye.